The first approach that we're going to cover is the big stones scalping approach, and the other that we have is what's called the momentum scalping entry method. And first we're going to cover the big stone scalping approach, and what I mean by that is that you see here how we have price is retracing back, and we have pre-identified a key level or convergence level or a key reaction level, which is based on a level of support resistance, maybe a Fibonacci number, and maybe a pivot level, or we're in the buy zone, pivot buy zone. We've pre-established a key level of support. That is an area at which we can look for a reaction, and therefore what we have to do is, as we watch price move down toward that level, then we will certainly start to stock and prepare our trade for when price and time meet the exact level as we look for a bounce. And what will happen is in your experience, as you move forward and you start to test this, what you'll find happen is that you will see that when price comes down, it is at the most fearful point, or the highest probability level will be the point at which the market will instill the most fear in your trade. But that's when you have to pull the trigger. And so therefore these are the levels that we're looking for to catch some pips off of the bounce. A couple of general order rules for big stone scalping is, of course, we are going to look for entry at a reaction level as close to support resistance as possible, which will allow for a tight stop. We will enter on price movement opposite to the anticipated direction of the move, as we discussed in our number 1 rule for order entry. Now, you can choose between a major reaction level, which of course will offer a high probability of a bounce, or you can also choose a minor reaction level, which will offer a lower probability of a profitable bounce. Keyword being probability of a profitable bounce. Now, a minor reaction level would, of course, be a level where you may just have one component, maybe just a fib, or just one pivot level, or some other minor component, or a minor support resistance level. That would be a minor reaction level, which typically would offer a lower probability of a profitable bounce. A higher probability reaction level would be one where we have multiple key levels converging at one point. How to determine potential reaction levels. Now, the first thing that you want to do is you want to start by observing the previous day's highs and lows and intraday support and resistance levels on the smaller time frames, the 15, the 30, and the 60-minute chart. You want to observe these price levels and mark them on your charts. Then what you will do is once you know what key levels are nearest to current price, then you will move to a higher time frame and note the key reaction levels on the higher time frames, because there is a likelihood that the market could trend that day, or it could be moving within a larger range, and therefore you may have to move to higher time frames to observe the higher levels of resistance and support on those time frames. So mark your support resistance levels, your fibs, your trend lines, and your pivot levels, and other levels on all of your time frames. Of course, focusing on the nearest first. Then you want to scroll down to the smaller time frames to watch the market reaction and begin to stock your next scalping trade. For example, this is a 15-minute time frame, and let's say, for example, there's a few different opportunities in here, but let's say, for example, the day opened and price was down here, then we saw a price shift up here. Look at how price came to this level of resistance, which became support, and it reacted off of that level. This, by the way, is almost 20 pips reaction right here. Price continued to move up, and you see here how this high became a level support here, and then price reacted. This was interesting because I was actually watching this when when it actually unfolded, and I thought this would be a good example. Although typically these still shot examples, they're actually a lot better looking when they are live. They're a lot more tradable and more observable when they're live. So as an example, when the European session opened, we saw a full-on bold-faced candle right here staring the intraday, the Asian low right here. We saw it right there, and I actually said to a friend of mine it is a good place to buy the pound. Boom, we got a reaction. I was anticipating, as a buy here, I was actually anticipating that the market would continue to move up, but it just came right to this low, to this level of support, become resistance, and boom, it reacted and fell. Now look, as price falls, look at this level of support, boom, price reacted. This is at least a minimum 25 to 30 pip reaction just off of that low right there. It reacts, comes up to this level of support, then falls. Now look at this low right here. Look how price reacts right here. Now this was a very small reaction, mind you, from this low to this high. It was not quite 20 pips, but it was 10. Okay, right off this low right here, it reacted by almost 20 pips. Then price came through and it retraced. Support becomes what? Boom. It reacts by a move of excess of 20 pips. Looking at another 15-minute chart, price moved below these lows. It comes up, it reacts off the lows, and it generates a 30-plus pip response. Then it slips through. Price rallies, support becomes resistance, and it responds in excess of a 20 pip move. Resistance becomes support, and it responds in excess of 20 pips. Then we see a big market rally. Price pushes through the high. Resistance becomes support, and price responds. And then resistance, price responds to resistance there. Then resistance becomes support. Price comes back and responds and rallies. Now you could say, why didn't the market bounce off of this level of resistance right here? That's a good question. And you see this consolidation, just this small consolidation right here, which lends to good scalping. Well, this consolidation preceded an economic report that came out in Europe. And when an economic report comes out, it will often have a disregard for the nearest levels of resistance and support, and it blew right through. But this is classic of post-report as well. Comes back, previous resistance becomes support, and it responds. Now, looking at this 60-minute chart, we see a rally, price retraces, and this 38% retracement converges with a trend line, a level of previous resistance and support. This is actually a good long-term trade right here at 32.80. And bang, price responds, pays 40 pips right away. Okay, support becomes resistance, and then price responds. Now trading in a range. Just moving back here, we see how price, you see this high right here, price rallied and it responds off the high. There are some trades right here in response off the high. Then price moves through, resistance becomes support, and then price responds. This high right here, one high, price rallies, it tests the high, and it fails, and it responds by a move in excess of 40 pips, 60 pips. So many scalping opportunities within this period as well. Looking again at a slide that we saw previous, maybe it makes more sense to you now. Price rallied through the high. It retraced. Resistance becomes support. Then it rallies through the high. Resistance becomes support. Price falls. Another opportunity for a trade. It rallies. It comes all the way back to 38% and a resistance and support level. Then it rallies to 62%. It falls. and this was a potentially likely place for a maybe for a buy order, which would have failed. Price moves through. Good selling opportunity here. Price goes to the 62% retracement, 162% extension, and responds. Support becomes resistance. Price responds. Good opportunity for a sell. At support becomes resistance, and price reacts in excess of 20 pips. Looking at a pivot chart now. Note how price has moved into a new day of trading. It moves above the central pivot, support and resistance. Potential sell here. Don't know if I would have taken that one. But down here, certainly a buy opportunity at S1. Here, price moves through, rallies to R1 and the high, and R1 hits right on the high at 32.12 and fell. Price falls to S2, and actually I've got this dark line drawn in here, and there's probably a notable level of support and resistance back here, but price falls to S2 and bounces.